Decoding Union Budget 2026. What changes for salaried investors? How big is the STT hit for F&O traders? Is this budget investor friendly? Hello and welcome to this post-budget special episode of Investors Hangout. This series is brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. Now the Union Budget is done, the speeches are over, and the real question that remains is, does anything change for investors? Well, to decode this budget, we have with us our in-house expert, Dhirendra Kumar. Welcome, Dhirendra.
Thank you.
Every year after the budget, I ask you the same question and you give me the same answer, version of, it's just an accounting exercise. Yet somehow come budget day and investors are really excited, watching TV, WhatsApp groups are buzzing. What is happening in the budget? What's your take on this budget?
It's just as boring. And it was shorter. Everything remains the same. If you look at, we tend to expect that there will be changes in personal taxation rate, some capital gains thing, something for the foreigners who have been running away from our market for a while. No such thing happened. One thing that happened was STT has gone up for traders. That is a big penalty, and that is something for which the market was reacting, and understandably so. Their life gets harder, become an investor.
Okay. So let me now get to the most common question that we get. I'm salaried, I don't trade, I don't speculate. What changes for me? I want to know, does this budget make my life easier or harder?
It is a status quo. You have to grow your income. And the basic premise that we are a stable, growing economy is pointing towards that. A growing economy provides opportunity, growth opportunities, new opportunities for unemployed, and hopefully that should sustain. There's a small change. One was the language, the tone, the accent, that was very comforting. That decriminalization of the small things that we have, the omissions. And then now we don't have to work hard to meet a deadline by December 31st. You get more time. Making changes in your income tax return. And decriminalization bit, that is something where easing things for the common guy, for the common person. And what I yet have to see that what comes out in the next, we are going to have a new tax code, personal taxation code, direct tax code, and what becomes effective April 1, 2026. She mentioned very in detail with great emphasis that things are going to be really simplified. And things have been simplified with the basic stuff itself. You earn 12,75,000 every year and you're sorted. You don't have to worry much. Beyond that, having those forms and everything becoming simpler and easy, and having greater accountability, having greater leeway, that is actually trusting the taxpayer. And that is very comforting. Small changes, educational, overseas education remittances coming, TCS on that coming down, that getting rationalized, I think that will be a modest relief.
Now let's talk about the more restless part of the market, the traders. If I'm an F&O trader, what's the hit from the STT hike, and should I rethink my strategy at all?
Yeah, you have to think very harder. One is that they should be thinking very harder anyway, because SEBI has been telling based on its survey for last 3 years, that over 90%, 92% and 94% traders lose money. So it's a losing proposition. Now you have to think that future STT on futures has gone up by 150%. And options, it has gone up by 50% on the sell side. That makes it very difficult that you just apply these rates on your last year transaction, and then you'll realize that if you lost some money, how much more you will lose. Because it looks like a very nominal increase, 0.012 to 0. Whatever, but that really isn't the case. It's a very significant part of your cost framework. So that's one. The unintended consequence, or the way individual investors might get hurt, is the arbitrage fund. They sell in the futures market and then they square up with their long position. So that is something. The arbitrage funds will also get affected. That they'll be negatively affected. Their returns will come down. Whether it comes down by 25 basis point or 10 basis point, that's a matter of how active it is, what is the scale of it.
So if you are a value research viewer, we believe you most likely are a long-term investor, but if you also trade in F&Os, then do share with us your feedback. What do you think? And how will this change your strategy? Will this push you more towards long-term investing, or would you like to stay with FNOs? Do share with us. Now, moving on to the next question, let's flip to the optimistic side of things. If I'm a long-term equity investor, where does this budget open up opportunities for me?
It opens up opportunity for in couple of things. One is reinforcing that infrastructure, the construction, the rail infrastructure, railways, and that has been on for a couple of years, and there has been no. It gets emphasized even now. Two big things which came in our, which was talked about in great detail was semiconductor. That is Semiconductor Mission 2.0. There is a large allocation, and that is something which is coming on the forefront. This other was biopharma, and the deep tech also get a policy and funding support, and a very sizable one. So these are two things which will about how will individual investors benefit from it. That government job is to enable a policy framework where businesses can reconfigure themselves, recalibrate themselves, and benefit from such policy initiatives. Which exactly will be the opportunity and how many years it will take to pan out, I don't know. But one thing we should not forget, that is, in her speech, she talked about artificial intelligence 10 times. That I think is good news, and that has serious connection with being independent or being on our own. And the semiconductor, back in focus is a great initiative. We have to see how it really pans out.
All right, one question now for the fixed income and conservative investors. Is debt finally getting interesting? Are there better options now with the bond market reforms?
Bond market reform has been on for 10 years, and bond market reform is not a, globally bond market reform or creating the activity, but creating some enabling mechanism for municipals to issue bonds, creating a wider choice for investors, creating different yielding with different risk profile investors. But options for investors is a great thing. But I'm not very hopeful about the corporate bond market, because corporate bond, you have a huge public sector banking industry. We have the government which mops up most of the liquidity. You have this National Savings Organization. Most people have their PPF account. That is fixed income. You look at the government bond, the way SLR and CRR really captures a good part of the deposit from the banks out of their deposits. So in that sense, we have to see how it happens, because when government competes with the same deposits, the same marketplace, and the risk profile is different, it's considered as a sovereign guarantee. So we have to see that how it evolves, because the market mechanism or the dynamics of it, or the machine or the whole environment that we have, the ecosystem for the bond market, I'm very apprehensive that how it really takes off from here. Is it really something which will make it so attractive that people will get excited about it? Unlikely.
Finally, the big picture. Is this budget investor friendly or not?
It is the status quo. Fiscal discipline is very much visible. No nasty tax surprises. Some missed opportunity, but I don't know whether we don't know we understand the compulsions, long-term capital gains or some such thing, and providing some sops to the foreigners who have been on the run. That was expected. It did not happen, and overall the direction is fairly steady rather than sensational. That's a good thing. Boring budget is beautiful.
Well, thank you, Dhirendra, for decoding this budget. Also, before we end this episode, there's another question that I would like to ask my audience. What is your takeaway from this budget? For you, is it a win, a disappointment, or a non-event? Do share with us, because we would like to get a sense of this. Thank you for watching this episode of Investors Hangout. If you like the show, do subscribe to our YouTube channel. Take care. Bye for now.